Hello, dear friends, and today we are going to try to understand what is GST 2.0. Like many people have been talking about GST 2.0, and there's a lot of news in the magazines, in the newspaper, and everywhere. What is GST 2.0? So let's understand what is GST, what is GST 2.0, the taxation system. Why did GST 2.0 come at all? What was the earlier GST? And how is this going to impact the common man and the other categories in the society? So let's understand the GST 2.0. I will make my best attempt to simplify the GST 2.0 for you. And it's important not only for entrepreneurs, understanding the GST 2.0 affects the daily life of the common man, whether you are a student, you are a professional, or you are an entrepreneur. So let's understand, let's simplify GST 2.0. So earlier, guys, there were a lot of taxes and there was a lot of complication and confusion with regard to the tax. There were different kinds of taxes: service tax, there was VAT, and there was cess tax, and the taxes were different state wise, and that created a lot of compliance issues, a lot of legal issues, a lot of complication. So in an attempt to simplify, to bring all the tax under one umbrella, the government came with the GST, that is the goods and the services tax, in the year 2017. Now, there was a lot of confusion again in that. You know why? Because there were four slabs even in this taxation system: 5%, 12%, 18%, and 28%. And the people, the consumer, the one who had to pay the tax, was confused. Which are the goods do I need to pay 5%? Which are the ones for 12%? Which were the ones for 18 and which were for 28? So this again still left the consumer with a lot of confusion. And now, to refine it a bit further, to make it a more simpler and to put more money in the pocket of the common man, of the middleman, the government has now come out with the next GST, the advanced GST, the simpler GST, that is GST 2.0. So 2.0 now has reduced the four slabs to just three slabs. In actual, just two slabs, the two major slabs, that is the 5% and the 18%. Let's understand these three slabs. Yes. So the goods that come under 5% are your daily consumables like food, beverages, consumables like toothpaste, bathing soap that are required on a daily basis by everyone, by the common man. And so the government has bought this under 5%. The second commodity, the second goods that the government has bought on the 5% is the medicine, the drugs. And the third, as you see above, is the medical equipments. The medical equipments like PP machine or checking your diabetes, all these have come under 5%. Now, which are under the 18%? Under the 18% is the electronics like the TV, your LEDs, your screens, the refrigerator, the ACs, and the vehicles, the normal to moderate vehicles which are not luxury, all these come under 18% tax. And the last, that is the third category of GST 2.0, is the sin and the luxury goods. Now, what are the sin and luxury goods? Sin goods are all those goods which, if you consume, can harm you, which are not good for your health. The government wants to discourage its citizens from using these goods. For example, alcohol, tobacco, all these come under the category of 40%. So if you are the price of these goods, the price of alcohol bottle is 1,000 rupees, you will actually end up paying 1,400. The above 400 is the tax on this sin good. Now, which are the luxury goods? Luxury goods are all those goods which are not your necessary, which are not necessary, which is not your need, it's your want. You just want to show off your status, you just want to blow up your money. So the government says, hey, you know what, if you have so much money, let's use it for the growth, for the development of the nation. And therefore, like for example, a car, you can move in a normal car, you can move in a moderate car, in a moderate SUV. But if you have a lot of money, you are spending on a Mercedes, on a BMW, on any such other vehicle, the government says, hey, pay 40% tax. So a vehicle that would be, say, for example, a 50 lakh rupee vehicle, you will actually have to pay 70 lakhs. The top 20 lakhs is your tax. It's a tax. A watch, you can see the time on even on a normal watch. But if you have a lot of money to take a Rolex, which is charged anywhere in lakhs and crores, then the government says pay 40% tax. Let's use this money for the less privileged. Let's use this money for the economically backward classes. And now, the most important thing, we have understood that which goods come under which category of tax in the GST 2.0. But let's most importantly understand the difference between the GST, the earlier GST, and the GST 2.0. So, this is the before and the after picture. Earlier, before the GST 2.0, which was recently announced by the government, on the consumables that were used by common man, which are required daily, like the toothpaste, like the soap, like the groceries, you are paying 18%. You are paying 18% tax. So, for example, if you are buying a commodity, say you are buying a soap, a bathing soap, which was 100 rupees, you are paying 118. But now you are only going to pay 105. You are going to save 12 rupees on every 100 rupees spent on consumable goods which are required daily. The second thing is the refrigerators, the ACs. Earlier, you were paying 28% tax. So if you purchased a fridge or an AC of 10,000, you are actually paying 12,800. But now under GST 2.0, you need to pay 10% lesser tax. That is, you just need to pay 11,800. You are saving 1,000 rupees more money in your pocket so that you can use it for other necessary things. You can save that money. The third is the vehicles, the four wheelers. Earlier, it was charged 28%. So, if you purchased a vehicle of 10 lakhs, you are actually ending up paying 12 lakh 80,000. But now, under GST 2.0, you are only going to pay 11 lakh 80,000. That is, you're saving a lakh more money in your pocket for important things, for future planning, for safety, for planning your future. And if you see the luxury vehicle, now here there is a kind of a glitch. Earlier, the tax was 28% and plus a 22% additional cess tax. Now, what is a cess tax? Cess tax is any additional tax that the government takes from the high income group since they have a lot of money in purchasing luxury goods, which is not a need, it's a want. And this additional tax was being used by the government for development project towards the growth of the nation, to build the infrastructure, to build the roads, to build the schools, to build the hospitals. And so if you see the calculation, that was 28 plus 20, 22, that was almost 48%. But now even this category is saving 8%. They have been uniformly charged at 40%. So this is the difference, guys, between the GST and the GST 2.0. Now, the question is, why did the government come out with this? The very first reason, to make it simpler, to avoid confusion and complications and compliance issues and legal issues. But as you see in the diagram, the government wants to put more money in the pockets, in the account of the common man. The government wants to put more money, wants to give more money to the common man. And secondly, the government wants to be just. It wants, if you have more money, pay more tax. If you do not have more money, do not pay more tax. The government wants to be fair. And lastly, to conclude, what is GST 2.0? It's a simpler, cheaper, and a fairer tax system. I hope this video makes it very clear, makes it very simple what is GST 2.0 and why did this GST come in? Why did the GST 2.0 come in? If you have liked this video, if you have understood it, kindly share with someone whom this video will benefit. Like, comment, and subscribe. Good day.